So the second part of this that's very interesting is what silver has done in these rate cutting cycles. And if you look at the last three, for example, silver has actually averaged over a 300% gain in the rate cutting cycle.
This is Kaiser Johnson, and these are the Miles Franklin Weekly Specials for August 19th through August 26th, 2024, while supplies last. First, we feature the famous 1-ounce gold Krugerrand at just $60 over spot. Next, we have the favorite bullion coin of Europe, backdated silver Philharmonics at just $3.10 over spot. And finally, we have 1-ounce platinum Canadian maples at only $80 over spot, one of the lowest premiums on platinum we've seen in a long time. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Peter Krauth from silverstockinvestor.com and also author of The Great Silver Bull. Peter, thank you so much for joining us today.
Elijah, it's a pleasure as always.
Well, it's great to have you again, especially as we see gold again topping 2,500, silver creeping back up towards the $30 level. I know last time we had you on, you talked about a little bit of consolidation that might need to happen after that big run up from $22 just in a few months. And it seems like we've had that. Where do you see, so I guess we'll start with silver and also gold going from here.
So, I'll be honest. I think that how can I put it? I'm cautiously optimistic, I guess, because yes, we've seen gold in particular. That's the standout at 25. Even this morning, we were looking at 25, in fact, and it's come back slightly as we're speaking, but obviously record highs, very impressive. But I cannot help but think that we could still see a little bit of, I guess, some correction potentially, both in gold, even and in silver. The reason I say that is for twofold, really. One is that the equities for both have not followed. Yes, they've risen, but nowhere near the same extent. I went back and looked at some charts of GDX, for example, SIL, the gold and silver ETFs. When gold was higher a couple of months ago, you saw these ETFs actually at higher levels than they are today when the metal is at now a higher price. So to me, that says those equities have not followed. So the other thing that I track is the outstanding positions, open positions on long contracts held by what we call commercial traders or commercial investors in the futures markets. This is both in gold and in silver. And the reason that I track them is because they're considered to be the smart money in the futures arena. And so you can imagine you've got large traders, you've got banks, you've got investment banks, you've got the large miners who really want to protect themselves on a potential downside, and a potential fall in the prices of gold and in silver. So what you see is when the metals prices tend to be, let's say, relatively low, then their outstanding contracts are their net short is relatively low, if not zero. When these metals prices have run up, then they're protecting against some downside. So what I've seen is that they are actually at relatively high levels right now in terms of protection for both metals. So that tells me that they see these metals at relatively high prices. They have concerns that the metals prices could come down. Now, don't get me wrong, I'm as big a bull in both of these metals as anybody. But I guess, on a near-term basis, and when I look at these indicators, which I regularly do, there is some risk, reasonable risk, that we could see, near-term corrections in the prices of both metals. And so that's why I temper my very bullish outlook, absolutely, as we go forward. And as I say, the stocks haven't followed, so they remain very attractive. But naturally, if the metal's correct, I'd expect the stocks to correct as well. And again, don't get me wrong, even medium term, this is going to be, we're very likely to end the year much higher than where we are now. I just think we could have a little bit of rough time over the next, say, few weeks or month or so.
Now, when it comes to rate hike or rate cuts, it sounds like we might get one or two rate cuts this year. How does that historically play into the silver price and also gold price? And do you think that'll be positive this time?
Oh yeah, I sure do. I mean, it's interesting. There's a chart that was put out by the Incrementum Group. This is Ronnie Stoferla who publishes the In Gold We Trust report every year. And what they did was they looked at how gold behaves during rate topping cycles. In other words, you get these cycles where the Fed and other central banks will raise rates. And at one point they pause. So they've reached that point where they stop raising rates. The rate stays at its peak for a while, and then they eventually start cutting. So what happens with gold is that gold tends to take off when you reach a point where the central bank has paused. So at the end of their rate hiking cycle. And we've been there for a while. Gold has taken off. So that's certainly, repeated once again. When I saw that chart, I thought, well, I need to go back and look and create the same chart for silver because no one's done that yet. And it was very, very interesting because what it revealed to me was that two things. One is that silver will do the same thing. Silver will rise as well in these cycles, but later than gold. Silver actually starts rising about halfway through the rate cutting cycle. So we're just about to get into this rate cutting cycle, arguably. I think it's quite likely the Fed will cut in September. So as I say, traditionally, historically, what happens is silver starts to rise about halfway through, or rise at least significant, starting halfway through the rate cutting cycle. So, that doesn't mean silver can't rise now or soon. It's just that it'll really start to take off. And that could be, who knows, early next year, maybe late this year, depending how many cuts come and what the final total cuts end up being. But so the second part of this that's very interesting is what silver has done in these rate cutting cycles. And if you look at the last three, for example, silver has actually averaged over a 300% gain in the rate cutting cycle. So the last three were 2000, 2008, and then in 2020 when COVID hit. So it could be very exciting going forward for silver. As we know, rate cutting is about to start and it's likely to continue. I believe it's, these usually are perfectly timed with a recession. That's why, because of the lag, that's why they start cutting. They've seen enough effect from the rate hiking. So these coincide with recessions. And so I think we're going to see some significant cuts over the next, say, 12 months or so. And I think that is just going to be rocket fuel for silver.
It is interesting because, if you look back at 2008 and also 2020, we saw quite a bit of a pullback first. Was that pullback before or after the rate cutting started?
So you're right. There was a pullback, and the pullback actually came. So, every instance is a little bit different. What's interesting is that in the 2008 instance, you had a crisis, right? So you had everything sell off. You had gold sell off initially as well as silver. And in that case, the price of silver actually dropped concurrently with the rate cutting cycle. And then as I say, as we got through to about the middle of that recession and the middle of the rate cutting cycle, then silver did take off. I measure from the bottom. So from about the time, as I say, about the middle of the rate cutting cycle, and from the time the silver price has bottomed. So, and then when we look at 2020, when COVID hit, that was maybe, I'm going to say, a little bit less dramatic, but you did see silver go from about $16 pre-COVID to $12. And that took a matter of maybe a few days or a week or so. It was pretty quick sell off. And of course, we had rate cuts. They didn't last as long. That recession was very short because printing was dramatic, combined with rate cutting. And silver took off very quickly, went from $12 to $30 in a matter of about 5 months. I remember that very clearly. So it was a tremendous time to be exposed to silver prices.
So last time we had you on, we talked about demand from India and also China for silver. Can you give us an update on that? Do you still see a lot of demand coming internationally?
I do. I don't have specific numbers for India actually right now, but what I can tell you is that I saw some research just recently that showed Chinese demand, and it is almost literally off the charts. This was research that showed 4 month return. Sorry, a 4 month measure of silver imports into China, and they had set a record high going back about 15 or 20 years. So it was pretty phenomenal to see. I think it's a combination probably of investment demand as well as industrial demand. But I think, it's fair to say that if if you look at where most of the demand from China for silver is likely coming from, it's more than likely solar, given how it dominates solar production at a rate of about 80% of worldwide production. So that continues. And, if you look at the jump from 2022 to 2023, we saw an incredible 64% increase in the amount of silver going to the solar industry. So that was about 118 million ounces to 193 million ounces in 1 year. And now the Silver Institute forecasts that we're going to see this year's demand from solar go to about 230 million ounces. So another 20% increase over last year. So it's just phenomenal. And I'd like to really point out something I think is significant. You can go back as far as 2015. So you go back 10 years. There has been no meaningful increase in total supply of silver if you look at supply coming from mining and from recycling. So that's about roughly, say, 15% from recycling, about 85% coming from mining. That's been right around 1 billion ounces for the last 10 years. And yet demand has grown to about 1.2 billion ounces. So we're in a structural deficit to the tune of about 20%. It's just really, it's phenomenal, really, what's been going on in this market.
Now, also upcoming is the U.S. presidential election. I know last time when Joe Biden was elected, a lot of people were expecting, a lot of green energy initiatives and all that to have an impact on silver. What did we see last time with, I guess, the Democrats taking power? And if that is to happen again, which it's kind of a toss-up right now if you look at the betting markets, but slightly favoring the Democrats, do you see that having any impact on silver demand?
Well, the last time was we're on 3-4 years ago. So there was, there certainly was a jump. I think most of it was really based on what had happened with COVID. The demand was up, and what we did see was that demand or the silver price gained and demand certainly increased and stayed up. Certainly because of a lot of the policies that were brought in, but we didn't see a huge jump in the silver price. And I think what happened was, before I talked about the silver supply, and when I talked about the silver supply, I said that silver supply was really from, if you look at total supply, coming from mining and from recycling. But it's important to consider that there are what I call a secondary silver supply, and this is what is above ground inventories. Now, these above ground inventories, up until about 2021, had been mostly accumulating. There were surpluses to the tune of anywhere from, a few million ounces to maybe 40 or 50 million ounces for a few years. Well, those accumulated and accumulated, and they ended up in different places like the futures markets. They ended up in ETFs, for example. And it's hard to estimate. Nobody knows exactly how much silver supply sits. You can look at these markets and get numbers from those markets, but there's obviously silver that people will own privately. Corporations or funds will own physical silver privately as well. But the point being that up until about 2021, there were these smallish surpluses that kept accumulating in this secondary supply of silver futures and ETFs and private hoards. But where you can get this clear data is from the futures markets or from the ETFs. And only starting in about 2021, you saw silver inventories start to drop pretty dramatically. And, people kept asking me, Peter, how come the silver price seems like it's capped around the, $28, $29, $30 level? If there's so much demand and the demand is growing and there's a structural deficit, demand is at, more than 20% past supply mining and recycling. And so I did some research, and to me, the answer was that industrial users, in particular industrial users, were able to tap into this secondary supply. They could go to the futures markets, they could go to the ETFs, they could hold long futures contracts, let them mature, and then take physical silver in delivery. They could hold buy an ETF with cash and say, the next day, I want delivery. And if you own enough of certain ETFs, you can take physical delivery of the underlying metal. So that's what I believe that they've done, because we've seen the inventories in these different sources actually come down pretty dramatically since early, depending on which market, from early to mid 2021. And I think that's what has, in a sense, capped the silver price. You've had this big consumption of silver that was able to go to stockpiles of silver, really, without forcing miners to produce more to meet this excess demand. Well, those stockpiles have been drawn down. They're not completely empty, but they've been drawn down pretty considerably. I'd say to the tune of about maybe 60 to 70% overall. So there's a little bit of an overhang that can change overnight. I think at most we've got, at this point, maybe 6 to 12 to maybe 18 months of that ongoing. I'm not even sure that, these inventories would allow themselves to be drawn down quite that much to have, to be almost at zero. If they did, it would be dramatic, and someone would come and have one of these contracts and say, okay, my contract is now matured, I want delivery. And then the exchange has to tell them, I'm sorry, we're out of silver. You're going to have to take cash, a force majeure, and you'll have to take cash instead of the physical silver. And they'll say, no, I want the silver. And that's when we'll hear about it as a headline, and that would be a spark that would, just sort of ignite a big silver squeeze. So I think that has been, as I say, a bit of an overhang over the silver price. That's going away. We've seen these inventories really shrink. And going forward, I think that that's going to be very much reflected in the silver price. The miners have proven themselves unable to keep up with this increased demand.
Now, when it comes to physical bullion, I know we've seen the start of more demand as we get out of the summer season, and people are starting to buy physical metal a bit more, and premiums seem to be maybe starting to creep up just slightly. Your perspective on the physical market moving forward?
Yeah, I mean, I agree. We started to see the premiums creep up. The markets are quite tight, especially, on the physical side. It's impressive. The retail investor certainly has come back into this market. And I have something I'll come back to in a moment. But the first thing I want to say is that you've got some big retailers that have now gotten into the bullion business. You've got Costco that's been selling for some time, gold and silver. Walmart has gotten into that as well. Costco is now selling anywhere from somewhere around $200 million worth of gold and silver per month. That works out to, if my math is good, almost to over $2 billion a year. I mean, it's just $2.5 billion a year. It's just tremendous. Costco alone, and by the way, Costco, it's one of the few things they will not take back from customers. No returns on gold and silver. Walmart is now selling this, and so it's just it's tremendous. People have really, I think the inflation bug has really started to bite. People realize now they are looking for alternatives. They are realizing what precious metals will do to help protect their buying power, and they've turned to this market. They see what it can do for them, and has been doing. Gold at $2,500. That's really no doubt setting off a light bulb in a lot of people's minds.
Before we let you go, Peter, did you want to share with the viewers maybe any last thoughts, some things that people should be paying attention to while we are in this crazy market right now? Gold making new all-time highs at 2,500, but maybe people should be a bit cautious, it sounds like, for the short term.
Yeah, cautious, I think, because, as I say, certain sentiment indicators. Another one that I hadn't mentioned earlier was the bullish percent gold miners index. So this you can track yourself. It's BPGDM is the index, and it's a percent. It tells you the percent of gold miners that are trading in a positive momentum or in a negative momentum, or at multiple week highs. And if you're anywhere above 70, then it looks typically overbought. If you're anywhere below 30, it's looking oversold. Well, right now, last I checked, we're somewhere around 78. And so it's certainly overbought. It's been at over 90 recently. That doesn't mean it can't continue to be even more overbought. But if you combine that with what I was saying earlier about how commercial traders are net short in both gold and silver, I would err on the side of caution. And maybe for the physicals, hold off a little bit. When it comes to a lot of the equities, maybe less the larger cap, but the juniors have still, I think, for the most part, yet to have had their run. I'd be more willing to allocate at least incrementally to some juniors. Certainly, if the metals sell off, they will come off as well. But you can never know if that's going to happen. You can never know to what extent. So if you are interested in some juniors, I think it makes sense to at least, as I say, start to buy in tranches, start to buy incrementally.
Fantastic. And if our viewers are interested in learning more, where can they find you?
So one of the best ways is to follow me at my where I publish my work, silverstockinvestor.com. We've talked about this before. I published a book called The Great Silver Bull, which is really more of an overview of the entire opportunity, what I call a generational opportunity in silver. You can buy that on Amazon, The Great Silver Bull. My newsletter, Silver Stock Investor, really is more of a real-time way to follow what's going on in silver. And more and more I'm hearing very well-rounded, sophisticated investors are saying gold's fantastic, but silver gives you even more potential. It has not kept up with gold, and so the leverage on the upside is likely to be even higher. It really has a lot of catching up to do. Other than that, I'm on Twitter. I'm on LinkedIn. You can find me at Peter_Krauth on X. I'm on LinkedIn, Peter Krauth, and those are the best ways to follow my work.
Fantastic. Peter, once again, thank you so much for your time today, and God bless.
Thank you, Elijah. It's always a pleasure.
This is Kaiser Johnson, and these are the Miles Franklin Weekly Specials for August 19th through August 26th, 2024, while supplies last. First, we feature the famous 1-ounce gold Krugerrand at just $60 over spot. Next, we have the favorite bullion coin of Europe, backdated silver Philharmonics at just $3.10 over spot. And finally, we have 1-ounce platinum Canadian maples at only $80 over spot, one of the lowest premiums on platinum we've seen in a long time. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.